Okay, let me ask you a question. That money in your bank account, you see it on your phone, you check the balance, and you just assume it's yours, right? Ready to go whenever you need it. But what if it isn't?
The really unsettling answer to that is no. And look, this isn't some hypothetical thought experiment. This is the core vulnerability of our entire banking system. It's a weakness that we just saw exposed with absolutely breathtaking speed.
So let's talk about the gap between that number you see on your screen and the actual physical cash a bank has. This is what we're going to call the illusion of access.
$42 billion. That is how much money people tried to pull from Silicon Valley Bank in a single day. Just to put that into perspective for you, during the 2008 financial crisis, Washington Mutual saw withdrawals of less than half that spread out over 10 days. What we saw here was a bank run moving at the speed of the internet. But here's the thing. The SVB collapse wasn't some kind of freak accident. It was just the latest high-tech version of a really old story. You know, the technology always changes. We've gone from people lining up on the street to just tapping on a phone. But the panic and how the system reacts to that panic, it follows a playbook that is surprisingly consistent over time.
So let's actually take a look at that playbook. We're going to start by rewinding the clock to a time when the entire American financial system literally froze solid. Just look at how fast this all happened. It starts in one state, Nevada. A few months later, Michigan shuts its banks. Well, that completely spooked depositors in all the neighboring states, who then, of course, started running on their banks. And in less than 3 weeks, this state-by-state panic forced President Roosevelt to do the unthinkable, shut down every single bank in the United States. And you gotta remember, this wasn't just some abstract financial problem. This was a human catastrophe. For thousands and thousands of people, their life savings just disappeared, wiped out. Because back then, there was no safety net, no deposit insurance, nothing. Now, it's really easy to look back on that and think, well, that's just ancient history. You know, we have FDIC insurance now, we have sophisticated regulators, but that core problem, it never really went away. And when an entire country's banking system is on the brink, the playbook for stopping the bleeding looks, well, remarkably similar. You think this can't happen today? Think again. Look at Argentina in 2001. They limited withdrawals to just $250 a week. Cyprus in 2013, 300 euros a day. And maybe the most shocking, Greece in 2015, a modern European nation. You were allowed to take out just 60 euros a day. 60! They give it a new name now. They call it capital controls instead of a bank holiday. But the result is exactly the same. Your money is trapped. So what's different now? How did we get from bank runs that took weeks to play out to one that happens in a matter of hours? Well, the answer is probably in the palm of your hand right now. The numbers here, they just tell the whole story. Back in 2008, the run on Washington Mutual saw about $17 billion get pulled out over 10 days. Fast forward to 2023, Silicon Valley Bank had withdrawal requests for $42 billion in just 10 hours. The speed isn't just a little faster, it's a completely different category of risk.
And it's not just us saying this. Top regulators are sounding the alarm. This is a quote from Michael Hsu. He's a key U.S. banking official, and his message is pretty simple. Everything is accelerating, but the brakes we have to slow things down, they haven't caught up yet. We are in a totally new era of financial risk.
So what's really driving all this? It boils down to 3 things. First, just pure speed. You can move your money instantly, 24/7. Second, coordination. Back in the day, you had no idea who else was panicking. Now, a single group chat or a viral tweet can literally coordinate a billion-dollar bank run. And finally, there's way less friction. Think about it. Physically going into a bank to empty your account, that feels like a big deal. But just tapping a few buttons on an app, it almost feels like nothing at all.
And this all brings us to the most important part of this whole explainer. To really get this, we have to kind of redefine what that number in your bank account actually is.
Okay, so here is the single most important thing to understand. Your bank balance, it isn't real money sitting in a vault with your name on it. It's an IOU. It's a digital entry on a ledger, a promise from the bank to pay you. The bank's liquidity, on the other hand, is the actual cash it can access right now to make good on all those promises. And in normal times, you'd never ever notice the difference. But in a crisis, that gap between all the promises the bank has made and the actual cash it has on hand, it becomes a massive chasm. When everybody tries to cash in their IOU at the exact same time, the bank simply can't pay. Your money hasn't vanished, but the bank's ability to honor its promise to you has. So what does this all mean for you today? The big risk isn't that your balance suddenly goes to zero. It's actually a lot more subtle than that. You've got 3 real risks. First is the access freeze. Your money is technically safe, but you can only get a tiny bit of it, like that 60 euros a day in Greece. Then there's the devaluation haircut. Your savings get forcibly swapped into a currency that's basically collapsing, destroying your purchasing power. And third is the bail-in haircut. If your deposits are over the insurance limit, some of your money can actually be taken and used to rescue the bank itself. So all of this forces us to ask a really fundamental question. What does safe actually mean when it comes to your money? Is it safe if you can see it on a screen but you can't access it? Is it safe if it's losing value by the hour? The biggest takeaway here is this. The safety of your personal savings doesn't just depend on your bank. It depends on the stability of the entire system.